We've got a little bit of a downward push here to start the week with key earnings and inflation data on tap. Our next guest says investors should look to REITs, real estate investment trusts. They haven't been immune to recent volatility, but are, quote, well prepared in this current environment. National Association of REITs economist John Wirth joined us now. John, I think of REITs as a group that are vulnerable when there's a rising interest rate environment for a number of different reasons. They tend to carry relatively high levels of debt, right? So their servicing costs are higher. And they're seen as sort of, because of their high dividend yields, as almost a competing asset for something like treasuries as their yields are going higher. So talk us through why you think they're well positioned here.
Absolutely. Happy to do it. I think the view of REITs as being high leverage players is one that is a little bit out of date, frankly. What we've seen is that REIT leverage has been coming down for basically a decade. So today we've got leverage ratios near all-time lows. The debt that REITs are holding is quite well termed out. They've got a weighted average term to maturity today of about 7 years plus. Net interest expense as a share of their operating income is at all-time lows, and about 85% of their debt is fixed rate. So they're really quite well positioned for a period of rising interest rates. And just as we compare them to other income-generating alternatives, it's important to keep in mind that REITs provide income, but they're not fixed income, right? So they provide both income through their steady dividends, as well as capital appreciation opportunities. And typically what we see is that in a period where you're coming out of a potential period of slow growth, as we might be in about a year, that we see REITs do quite well.
So why would someone look at REITs versus, say, high-growth internet at this point? Even though high-growth internet is perhaps being redefined, REITs still have to compete for the same attention when investors are looking to get back into the market as they do against technology or some of the other more flashy names.
Yeah, and I think it's important to think about that from a portfolio construction perspective. One of the things we see is that commercial real estate is such a fundamental piece of the overall economy that it's really critical for investors of all types.
But is commercial real estate still as necessary if you have less people that are going into offices or there's more of a hybrid work approach? Is it still carrying the same weight?
Absolutely. I think you really need to think about the breadth of commercial real estate. Commercial real estate, I think many investors think about it as office and retail, but it's a really much broader space. So for example, in REITs, you have data centers, cell phone towers, logistics facilities. So you're getting the breadth of the economy that's housing the breadth of the real estate that's housing the modern economy. So you may feel like, hybrid work is going to have people in the office less. That means you're going to have more activity through data centers, cell phone towers, logistics facilities. REITs provide a way to grab the whole breadth of the real estate space.
John, maybe I'm looking at it too simplistically here, but if we are going into recession next year, that might kick people out of their homes. Doesn't that mean some of those public storage names should do well, like they did in the Great Recession?
Yeah, and I don't think public storage and the other self-storage places are really going to benefit significantly from people maybe losing their homes. What we see is that's a sector where we saw a huge bump during COVID, a huge bump in demand as people used the space they had differently. So they cleared out the guest room, they cleared out the garage and turned those into gyms and maybe schoolrooms in some cases. And that gave a huge bump to self-storage demand. And then that was got another dose of demand as the residential real estate market heated up. As that market cools down, we may see some diminution in demand, but whenever you have people making transitions in their lives, whether that's moving, sending kids to school, bringing kids back into the household, what you see is that they're using self-storage as part of that.
All right, you gave me a whole new reason to rewatch Storage Wars. National Association of REITs economist John Wirth. John, appreciate the time here today.
Thanks.